This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome back to the Research Talks here on Stockbox with Alan Green, our research analyst. Alan, how are you?
Good morning, Mark. I'm pretty good. How are you?
Yeah, good. Thank you, Alan. Good, thank you. So we're here on Friday again, and it's looking a bit grey over here, that's for sure. Autumn is moving in swiftly.
Yeah, well, we had the most spectacular thunderstorm the night before last, which was worth just sitting with the lights off just to watch it. It was absolutely spectacular. But more rain last night, big grey this morning too. I think we've had our summer. Those few days of those few balmy summer days, I think, mark the end and draw a line under this summer's activities.
This year's summer activities. There we go.
Yeah. So now it's closing in. Dark evenings, all of the stuff that goes with it, and I guess it's Christmas shopping time.
Oh no! Don't start talking to me about Christmas yet. No, it's too early, Alan. I thought better of you. Anyway, from what I'm reading, the UK is not going to have a Christmas. There's a few empty shelves.
Yeah, I think you're probably right. No, I've already seen, somebody's already sent me around the meme that goes around in the quarter 3, quarter 4, which is from the film Elf, where Will Ferrell's saying
yes.
only so many days to Christmas. So that's already doing the rounds, I'm afraid.
Terrible. Yeah, I haven't seen it yet, but no doubt it'll pop up on my timeline at some point.
Well, if you like, I'll just send it on to you, just so you know.
So I've got it. Get it over and done with.
Yeah, get over and done with. That's it. Yeah.
So today you're going to be talking to us about Panther Metals and Mosman Oil and Gas.
Indeed. Yes, that's right. Yeah.
Okay. You want to take Panther first?
Yeah, let's go with Panther first. So of course, listeners will know Panther well. We've discussed the company on numerous occasions in the past. Just a quick recap on the financial performance. Shares are currently trading at 13p. Over the past year, they've risen some just under 35%, so it's a very good return on the year. But of course, in keeping with most companies in the sector, the past 4 to 5 months have seen a general drift back in the share price. Nonetheless, the company has a market capitalization of just under 8 million, 7.8 million. Shares are traded as high as just under 18p on the year and as low as 7.6p. So we're currently halfway between the two. But Panther are at a very exciting juncture in terms of their evolution as a company. They have projects in Canada and they have projects in Australia, and I'm going to basically just go through the projects in Canada first, because they're less current, if you like, than the Australian developments, which I think investors will be following very closely. So over a year ago, the company acquired a series of licenses in the Schreiber-Hemlo Greenstone Belt, and of course, listeners will have heard me discuss the potential there. Of course, is on the north shore of Lake Superior, which is one of the huge northern US and Canadian lakes, and the territory north of there is almost limitless, both in terms of its size and also its scope and potential for geology, for base and precious metal discoveries, and really exciting opportunities for small companies to get in there and maybe get lucky with a great license acquisition. And of course, the CEO of Panther is Darren Hazelwood. In a sense, Darren is poacher turned gamekeeper. He started out as a retail investor, gained a very deep understanding of the process of mining, and became CEO of Panther some time ago, and has done a very good job. Some 15 years experience now of running Panther Metals and being in the mining industry. And of course, Dr. Kerem Sina, who is the non-exec chairman, has many years experience. He's known for his work with Ariana Resources, and the team have a number of other directors on the board, some of whom will be heading up the Australian project, which I'll come to in a second. So the As the project in Canada expanded, the company acquired additional licenses in an area called the Dotted Lake, and in November last year, the company confirmed that it had discovered high-grade gold at the surface. Samples that were sent to the ALS labs, verified the historic data that was first put together in 2010, with gradings as high as 18.9 grams per ton on the surface within the Dotted Lake prospects. The Panther also added a series of additional licenses within the area, and of course, work in that region is still undergoing. Then I'm going to bring us bang up to date. About 3 weeks ago, the company announced a further acquisition. It acquired a huge number of claims in an area called the Abonga Greenstone Belt, which that sounds more like an African name to me, but nonetheless, it is also in a similar region. It's 80 kilometers north of the Lac des Îles mine, and also 160 kilometers north of Thunder Bay. So it's in that almost limitless territory I alluded to at the start. This consists of a package of license holdings, and it's struck a deal with a company, the company that owns the licenses, called Broken Rock Reserves. It's paid an initial 50,000 Canadian dollars up front, and given Broken Rock Resources 200 or just under 230,000 Panther Metals shares. Then there are a further series of stage payments, 4 further stage payments of 30,000 Canadian each, and a final payment of 250,000 Canadian, also with 500,000 share options at 13p as part of the deal too. And the deal is that, of course, that the exploration work will continue, and these as a result of the acquisition, Darren confirmed that the Abonga Greenstone Belt trend was almost now entirely controlled by Panther Metals, which is extremely exciting. They've identified 2 initial drill targets already, and those are prospective for gold, nickel, platinum group metals, and base metals. The deal again with Broken Metal on this, if it goes through to production, then there's a 1.5 net smelter royalty production, and that there is a clause in there where Panther can reduce that net smelter royalty to 1%, with a buyback clause of 3 million Canadian dollars. So an extremely good deal, I think, for both parties. But certainly, Darren has proven himself a very adept and shrewd deal maker, and I think he will be fully aware of the data that the company has put together on this prospect. And of course, it's an additional huge area for the team operating on the ground in Canada to develop. So we're expecting some very exciting news from there very soon. So we now go back to Australia, and there are a number of prospects in Australia. I'm going to focus today on the Moralia Gold Project. We also have there the Maracay Gold Project and the Annaparoo Gold Project in the Northern Territories. And again, there's the latest presentation on the Panther Metals website does provide some detail of those. Nonetheless, November last year, Darren said the company had taken a major step forward by acquiring the Moralia Gold Project, and this is tenements that include East Burtville, which historic exploration has already established, sampling at 8 meters at 6.7 grams per ton. The Ironstone Project, 4 meters at 5 grams per ton of gold, and the Comet Well, which is 2.6 grams per ton in soils. And this is a region that's renowned for nuggety gold discoveries. So that's very much part of the process. So Darren said that the Moralia project is the type of property that Panther's team skill sets can create a commercially viable project from, and the prospect is close to a number of producing mines, the Granny Smith mine, which is fantastic. That's a 3 million ounce resource. The Sunrise Dam resource, which is an 8 million ounce resource. Wallaby, also 8 million. And there's a great deal of potential within the prospect too. But also at the south of the prospect, we have the Coglia nickel cobalt project. It's at the south end of the Moralia prospect area, and this is probably even more exciting and near term for Panther, in that it's a nickel cobalt project which has should I say, disparate data sets. So these are data sets from different companies at different times, which has established a JORC compliant target of between 30 and 50 million tons, containing between 0.6 and 0.8% nickel and 400 to 600 parts per million of cobalt. So that's a significant amount of nickel and cobalt right in the ground there. Panther hired Geomin to assess the data sets that were already in place, and they pulled the data together from two companies, looking at nearly 70 drill holes and data from these companies into a single database. And Geomin said, after completing work, there was now good potential to upgrade the complete target to a mineral resource, which is incredibly exciting. So the company has, for a very modest outlay, acquired, as Darren says, a potential company maker with a lot of the mineral open at depth. So this is a big step forward for the group, and I think this is where, combined with Annabrew and Maracay and the three targets, Burtville, Ironstone and Comet Well, in the Moralia area, we're going to see a sea change in terms of Panther's activities and also in its valuation, and that is being driven by the intention to list Panther Metals Limited, which is the Australian subsidiary, on the ASX market. They've already raised 300,000 Australian dollars to pay for that listing, and those have been exchanged for shares in Panther Metals. As a result, Panther Metals PLC, Palm, of course, the Epic Code, now has a holding in the Australian subsidiary at 77%. So the share price, as I said, has drifted back. We've seen sort of the valuation holding out well, but it is a lot lower than it has been certainly back in May this year, and of course at the start of the year, when I think a lot of the small microcap mining and exploration companies were at their peak. But nonetheless, I think still offers great opportunity now to get into this prior to the ASX listing taking place. And of course, once that happens, that will then trigger a benchmark of valuation that will go straight onto Panther Metals' balance sheet and create a new store of value over there. And of course, that's without any further news or developments coming from Canada. So all in all, at a very exciting juncture.
Indeed. And of course, the focus with Panther directly now being in Canada, Australia will begin to look after itself. But the focus is really there. And things ramping up, I believe, in Canada as well, with access roads being cut, quite a few, 60 kilometers, I think, of access road being cut to get equipment in to start the drill campaign. And Darren is very bullish about getting started there and getting some exploration underway. So yeah, I think it's as the new business year kicks off, so to speak. I think it's Panther is an exciting point.
It is very well poised now. I think that there are investors looking at micro-cap companies like this are looking for value inflection points, at which point it's going to change the valuation of the company and move up to the next level. And you've got two key triggers here, and of course that's the drilling work commencing in Canada, and of course the ASX listing. So there's a lot to look forward to in the very near term, and I think an entry point now will look great value probably 2 to 3 months from here.
Okay, excellent. Okay, well, let's talk about the other company then, which is Mosman Oil and Gas. And what's the oil price doing, Alan? It's been doing quite well, hasn't it, recently? Have a quick look on my... There we go, 70, 72. Yeah, so that's it's doing all right, isn't it?
It is, yeah. It's and Mosman Oil and Gas is very much an oil and gas company, as I'll sort of articulate in the next few minutes. The company has assets. It's obviously listed here in the UK. The company has a market cap of 5.9 million currently. Shares traded as high as 0.28p on the year and as low as 0.12p, 0.12p. Currently at 0.16p, so very little premium, I think, in the price given the developments of late, and particularly following the half year production numbers, which really put a floor under I think in terms of valuation under the share price. So the company has a series of assets in eastern Texas, and these are oil producing assets. And we've spoken about other oil companies with these small operations over there, and a lot of these operations are very small in scale, but they're highly profitable. And if you can get the mix right, then you're producing barrels of oil per day equivalent at a very economical rate, and potentially creating a very profitable company. So the company has a number of assets: the Stanley asset, Greater Stanley asset, the Livingstone and Winters well assets, the Falcon asset, and also the asset in Australia, which is the Amadeus helium gas project, which I'll come to shortly. So the year has been all about, in terms of news flow. I interviewed the exec chairman, John Barr, over the summer, and John just described where the company was. The big thing about Mosman, it's a profitable company. At the half year numbers, it had 2.5 million Australian dollars at the bank. It doesn't have any debt, and it has a series of joint ownerships at wells in East Texas with a number of private companies, and is gradually increasing its ownership. Its broker SP Angel said that it estimates that Mosman could have cash at the year end of some 2.6 million Australian dollars, which I think is quite realistic. But it also believes that it can grow its production base by 700% during this year, and certainly the growth in production so far hasn't quite reflected that. But I think the numbers in the half year just reflected the consolidation and some of the problems that they had with the Falcon well. But June the 28th, June the 23rd, the company announced an immediate boost in production. It acquired a company called Nads Oil Go. This is a private company for $1.1 million, which gave it a 20% increase in the Stanley well, and a 20% increase in well one in the Livingstone well, and a 23% increase in the Winters well. And effectively, as a result of that acquisition, it became an operator in control of day-to-day activities at those wells. So immediately that gave that's given a big uplift in terms of the net numbers that the company gets back from production. On June the 28th, the company said that the Falcon 1 well they'd sorted out the production problems with that and come back to something like 119 barrels of oil per day average. And in the 6 months production note to the 30th of June, the company produced a total of 40,187 barrels of oil, which netted 12,143. And that's an increase compared to the 6 months to 30th of December. The net then was just over 10,000 barrels of oil, so that's up to 12,500. But that all happened before Mosman increased its production capability as a result of the Nads Oil Go acquisition and the wells that it will be drilling going forward. The July numbers are expected to increase dramatically on the back of that. In addition, the company is going to be drilling Winters 2, Greater Stanley, Falcon, Galaxy, and Cinnabar, which are all within the group's portfolio in the coming months. So we're going to see a big uplift in terms of activity, and certainly with the acquisition of NADS Oilco, SP Angel, the broker, said it was a very shrewd acquisition for the group, which gives them big upside exposure ahead of Galaxy Drilling. With also in July, the company paid $40,000 net. Received $40,000 net from the Falcon well, and on the back of that increased production, it upped its interest from 50% to 75%. So all the way through, that takes it up from some 40 to 50 barrels of oil a day to 90 barrels of oil per day. So all the time we're seeing this increase in numbers, and of course, Mark, as you pointed out at the outset, that strong oil price means that that we are going to see a big uplift in numbers in the second half of the year. But that's just part of the story. So this is ongoing, and I expect that we'll hear further acquisitions of interest in this area going forward. And certainly, John Barr and his team are working rapidly to turn this into a major producing group. So for a company with this sort of market cap, that sort of oil production, I think, is in no way reflected in the valuation of the company. And I think on that basis alone, it offers huge potential. So we then go to Australia, and we go to the Amadeus Basin, which is renowned for there are a number of oil wells there, but there is a lot of interest in helium, and of course helium is a gas that has numerous applications, both in the medical field, the nuclear energy field, and also in space as well. Demand for helium massively exceeds current production, and it's this really which is gives Mosman its blue sky opportunity. It's estimated that the Amadeus alone, as it stands at the moment, could treble Mosman's market cap. Certainly the broker SP Angel believes that the asset there, unrisked, is worth currently $172 million. So that's exciting enough. But we then get to the activity in the region. In the middle of July, the company announced it had undertaken a gas seep study over the EP145 territory. It confirmed helium around the Moralia oil field, the Tent 1 exploration well, and Geognostics Australia are currently interpreting the geological data that's come back following that area survey. So once we start to get a better read into that, then I think we're going to see this Amadeus prospect really start to move forward. But there's some anecdotal evidence that supports the activity and the potential in the region. Central Petroleum are also active in the Amadeus Basin. They are currently commencing exploration at the Ducas and EP1112 prospects, which it says in a recent note are multi-trillion cubic feet gas prospects. Also, a recent note on Mosman stated that there was something like 1.5 trillion of what's referred to as P50. So that's P50 means there's a 50% chance of their recovery. P50 unconventional gas with a potential 9%, containing a potential 9% helium. And of course, that basically equates to 140 billion cubic feet of helium. So once work commences there, once work commences to extract this gas, then I think we're going to see the value of that field attributed to Mosman in a very big way indeed. So, in summary, you've got a company that's increasing its oil and gas production. It delivered a modest increase in oil and gas production from East Texas in the first half of this year compared to the 6 months up to December 2020. But it's not that production does not reflect at all the acquisitions it's made since then and the increase in working interest. So when we get the next trading update from East Texas, I expect to see a big uplift in those numbers. We then add on top of that the blue sky potential of the EP145 helium prospect. If, as broker SB Angel says, unrisked it's worth $172 million, then at some stage that value or some of that value will start to manifest itself in the valuation of Mosman shares. So at current levels, I think it's an absolute no-brainer with a market cap of under 6 million.
Yeah, under 6 million and 172 unrisked, did you say?
Unrisked, yeah.
Unrisked,
yeah.
For Amadeus there. So,
yeah.
I mean, only if a small percentage of that being reflected would dramatically transform the market cap. What do you think the inflection point might be with regards to Amadeus?
Well, I think it's not necessarily what Mosman do. I think it's what the other companies operating there do. There are other companies there too, but once Central Petroleum starts drilling and we start to get some idea if what they've estimated it down there from the survey work proves to be down there, greater or lesser, then I think we can get some read over into Mosman's Amadeus prospect EP145. Okay. But that's very near term. But also near term, of course, with the increased production numbers from East Texas, and of course, if the oil price stands up or continues to show the strength that it has been, then where are we going to see Mosman go from here? The only way is up. and also I should say the company has no debt and $2.5 million Australian dollars in the bank. So,
Okay.
Yeah.
So are they actually generating revenue now?
Yes, they are.
They are.
That's right. That's the thing. The cash is coming in from the oil production.
So when we get this next trading update, that will really, give an update effectively on the value of what they've got producing.
Indeed it will. Yeah, that's right. If you look at the half year results, that's where the most recent numbers are. That will give you some idea of production, and also, of course, with you've got the total numbers. So the total produced up to 30th of June were just over 40,000 barrels of oil equivalent. Net back to Mosman was 12,000. But the bigger wells there, they've now increased interest in from with Falcon 1 from 50 to 75%, and of course with the Stanley, Livingstone, and Winters 1 well, it's increased work interest there massively as well. So Stanley's gone from 27 to 60%, and we're going to see a big jump in those numbers, and obviously the cash that's coming to the company. So it may even be that the Angel's estimate of $2.6 million Aussie dollars in the bank at the year end proves conservative.
Okay, and when are we expecting that update, Alan?
Well, that update will be due, I would imagine, at the end of quarter 3.
Right. Okay. So very soon.
Yeah, very soon. Very soon.
Okay.
Yeah.
Excellent. Well, thank you very much again for telling us there a bit about the investment case of both Panther Metals and Mosman Oil and Gas. And we'll speak again soon, Alan.
Thanks, Mark. Speak soon.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.